All right. 12 o'clock. Today is the first Tuesday of May, May 4th. Let's jump into it. So time for my prop trader market update. Were you ready for today's sell-off? Quick disclosure. My name is Derrick. I'm an associated member of T3 Trading Group, which is an SEC registered broker-dealer and member of FINRA SIPC. You should carefully consider whether trading is suitable for you in light of your own financial condition. Quick position disclosure. These are the positions I am currently involved in into today's dip. I'm so excited to talk to you guys about the market, but I guess we got to talk about me first. My name is Derrick Oldensmith. Again, I'm Senior Trader and Registered Principal here at T3 Trading Group, LLC. I have been with T3 in one form or another since 2010, licensed professional trader since 2011. I've mentored well over 100 professional traders, currently managing a group well in excess of 50. I'm big into skiing, hiking, martial arts, traveling. I'm in Idaho right now. I've been traveling all year. I will finally be returning to New York City in June, so I'll see some of you guys there. Here's my email address. Today I'm going to be talking about markets, first and foremost. I'm glad we have an exciting trading day today because there's a lot that you can learn from it. So we're talking about markets. We're talking about trading with T3, becoming part of my team, becoming a professional trader or a retail trader with T3. So we're going to be providing a lot of information to you guys. But first and foremost, and of course if there's any questions about any of that, feel free to post it here in the YouTube comment section or email me. Let's go to the charts. I'm excited to talk about today. Were you ready for today's sell-off? That's the big question. Market's going up, you're making money, congratulations, you're long. It's real tough, right? Show me what happens when a trader's ideas don't work out. Show me what happens when the market goes down. Show me if this trader has the flexibility to be able to manage risk when markets go down, or even be profitable when markets go down, and still be able to make money when markets go up. And I'll show you a successful trader. Not the trader who is able to just ride the trend long forever as long as those positions are going higher, and then as soon as the market pulls back a little bit, oh my God, it's the end of the world. My positions are going against me. What do? I thought that stonks only go up. I've been speaking to a lot of people recently who've been frustrated by the last few months of trading. They're probably even more frustrated today because of how hard the selling is. You shouldn't be. If you are frustrated, it means you need to get yourself educated. You need to get yourself part of a professional team. We called today's sell-off really well. So just to recap, I've been really bullish on this market since the end of March. Starting in here, beginning of April, every morning meeting, I'm telling my team about how bullish I am. We're working higher. Then we build out this bull flag here for the SPYs, this bullish consolidation. And then all of a sudden, things started to get a little shaky under the surface last week. A couple of things to note. First warning signal was the VIX. So I thought that there's supposed to be an inverse correlation between the VIX and the market. So how come the VIX put it in its low on April 14th and the SPYs we're able to keep going higher and hold up here even as the VIX started to massage itself higher? Now, if the VIX starts going higher with the market, does that mean, oh my God, sell, get out of all my positions? No, it doesn't, but it can be a warning signal. Last time we spoke about that warning signal was right here at the end of August and the beginning of September. The VIX topped out at the end of August. The market didn't top out for like 5 trading sessions later. This was a big signal as the market went parabolic, got really extended to the upside, and the VIX started going higher with it, that a sell-off was coming. We recognized that sell-off, we took advantage of it. And again, it should never just be one thing, but these things are things we need to take notice of under the surface. Is this a bullish pattern coming into yesterday, coming into last week? Any day last week, if you're looking at the S&P, you can't say this isn't bullish. It's extremely bullish. But at the same time, I started to become much less bullish last week, again, for two main reasons. Here, I had no reason to be bearish at all whatsoever, and I still, even into today's sell-off, would not call myself bearish. I would call myself less bullish. Reason number one was the VIX. Reason number two, well, the other one everybody's been talking about, those earnings. I can't help but ask myself, Apple's earnings report, Amazon's earnings report, especially those two, but also a little bit, Microsoft's earnings report. The Apple and Amazon earnings reports were mind-blowing how good they were. Mind-blowing. Those numbers were unreal. And on top of that, Apple increases the dividend, increases an extra $90 billion on their buyback. And the stock has a false breakout through 135.50. And now here we are, 3 trading sessions later, $8 lower. Well, that was a signal. I can't help but ask myself, those Apple numbers were so incredible and they sold the stock like that. What would the Apple report need to be in order for the stock to have actually gone up on this earnings report? You need world domination or what? Unbelievable how amazing those numbers were from Apple and Amazon, and they sold the stock. That was the other major warning signal. And what that also led to was basically a false breakout here in the SPYs. Right? You have this beautiful little bullish pattern that was setting up. Market starts to go and then up. Doesn't go anywhere. False breakout in the SPYs. So based on all that information, I'm seeing the VIX. I'm seeing these mega tech companies report amazing earnings and sell off. I'm seeing this false breakout in the SPYs. And all of a sudden I've got to tell my team, guys, I'm waiting for a technical signal here to confirm this, which we still didn't have until today. But I can't be as bullish now as I was at the end of March or the beginning of April. And then we come into today's trading session. Well, what happened today? We gapped it down. But I thought that, hey Derrick, I thought that gap downs bull markets were buyable. Maybe, it depends on the type of gap. Today's gap is what we call a breakaway gap to the downside. In other words, we gapped below support. So I was looking at a couple key support levels throughout this week. First is our tight upper level support, which is about 316.30, right? You can see here all of these continuous recent days of last week. Last week was a boring and difficult trading week because the market didn't move. Built out this base here, the ADMA caught up to it. The lowest point of that base was 416.30. So I'm looking at 416.30 as support number 1 for SPYs. And then support number 2 is really down here near 410. I'm actually calling it the area. Support number 2 is the area between 412 and 410. It's the second spot that I'm looking at. That's SPYs. Qs. Well, our big level of support here in the Qs, because it didn't have that same degree of upper consolidation, it had already been drifting lower because of the sell-off from Microsoft, Apple, Amazon. Big level here in the Qs is 334 even. So where did we open today? Let's go back to the SPYs. So I just said SPYs, 416.30. 416.30. Important spot. Let's go to 5-minute chart. Well, where did we open today? What's the opening price? Opening price today for the market is 416.08. We opened below 416.30 support. What about the Qs? Qs we said 334. 334 daily support. Where did the Qs open today? Qs opening price is 333.56. Opening below support. When a stock or a market gaps above a resistance level or below a support level, we refer to that as a breakaway gap. Breakaway gaps tend to lead to movement in the direction of the gap as opposed to a gap fill. So typically we see these common gaps every day. They usually get filled. That's not what this is. This was a breakaway gap to the downside. This was an important lesson. And what I said to my team this morning was, if the market can't recapture those levels right away, 334 for the Qs, 416.30 for the SPYs. If they can't capture and hold above those levels right away, we could be looking at some real downside selling. Why? Well, think about it from a supply and demand perspective, because that's what trading comes down to. If you bought in the SPYs on any of these last 1, 2, 3, 4, 5, 6 trading sessions that built out this base, you are currently out of the money. And what do people do when they're out of the money? They sell or they hope and pray. And as if you're a professional trader, you are much better off selling and managing your risk and getting yourself stopped out. They sell. So you're going to be devoid of buyers, but lots of sellers. Qs. If you bought the Qs on any of the last 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, what's this low? 333, 16. If you bought the Qs on any of these last 16 trading sessions, you are out of the money into this morning's gap down. And again, what do people do when they're out of the money? They sell, they take their losses, they move on, hopefully, or they hope and pray. You don't want to do that. It is no surprise that the breakaway gap to the downside led to this selling. So the question is, were you prepared for it? Did you utilize the signals that we spoke about, the VIX deviation, the Apple earnings sell-off, the Amazon earnings sell-off, the Microsoft earnings sell-off, the failed breakout in the SPYs? Did you use any of those to reduce risk ahead of time? Did you use today's breakaway gap as an opportunity to hedge yourself, to get short the market, to recognize the break of support? Did you do any of that? Were you game planned for that? Were you game planned for all scenarios? If the answer is no, if you didn't recognize any of the things that I spoke about today, then you should get yourself involved with a professional team. Because my team and I recognized it, spoke about it, prepared for it, and some of us took advantage of it. So these are the things that we got to recognize. And it was funny. Some of the people on my team into this move here, end of March, beginning of April, they were like, "Derrick, you're a permabull. You're so bullish. You're a permabull." And they know me, so it was like a half joke. But I was so bullish in here, and there was no reason not to. And then guess what? When the signals change, when the market gives me a different message, I flip the switch. We went from, in my mind, everything's a go, all signs are a go, bullishness, to, all right, we got to take pause here. We got to have a warning. To today, can we hedge ourselves? Where is the next dip? Like, where can I start buying? That's the other question I'm asking myself. Look, I started by saying, today's candle does not make me bearish. I am still bullish. Look at the weekly chart. Look how bullish this weekly chart still is. Yeah, we got a little bit of a shooting star candle in the weekly last week, but the market was extended. The market was extended here. We had this big breakout from $400. You had the SPYs trading at $418 with the 80 EMA on the weekly at $400. So we were extended by $18 or so on the weekly chart. It makes sense for us to go sideways or to pull back. I mean, the 80 EMA here, which, for people who follow my webinar weekly, that this is what I consider to be the upper band of equilibrium. The 80 EMA is at 408. So even in the face of today's sell-off, right now we're at 413.30 as I'm speaking, we're still extended by $5 from the upper band of equilibrium. This is not unhealthy for us to pull back on the weekly chart after the incredible move that we've had. This is what markets do. They don't just go straight up. Even when they're extremely bullish, they go sideways, they give pullbacks, they build out. The weekly chart is still bullish. I'm still bullish. But smaller time frame, which is the daily chart, smaller time frame, which is a 5 and 15 minute chart, I'm going, okay, need to take a step back here. This is not looking good. What are my next levels of support? Where can I start looking to potentially buy a dip? And I'm looking at this area between 410 and 412. SPY's here, low of the day is 411.67, and now we've pivoted back up here and we bounced almost $2 here off of this low, a little high volume on there, so we're getting a 15-minute correction. Can this lead higher? I still think dips are buyable in this market. But you can't let a gap down sell-off like this put you out of commission. So here's the other big thing I'm getting from a lot of people that I speak to who are interested in potentially joining T3. Derrick, I'm interested in joining T3, but I've just been struggling so much with this market recently. I'm in all the wrong stocks. I'm so frustrated that the SPY and the Qs are near all-time highs, and I'm in all these stocks. They're talking about the momentum names that are all at lows, right? Your Jumai here, just, a lot of these same stocks that I was talking to you guys about, saying, oh my God, I can't believe these things are going up 100%, 200%, 300%, 500%. I can't believe these things are going up 500% in 4 months. And I was telling everybody who was following along my webinar then that these were mini bubbles. These stocks don't belong doing this. There were so many of them. Now the same people are saying to me, oh my God, my stock is down 50%, 60%, 70%, the market's at highs, what do I do? You need to be game planned and you need to have risk management. That's what you need to have. A game plan and risk management. Money rotation, relative strength. Those are the key things that we're paying attention to. It might not be sexy, but where you want your money right now is in XLE. It's in XLF. It's in Macy's. These safety plays, these unsexy names, that's where the money's gotten rotated to. But if you're sitting here in a Jumai or any of these other names, Plug or Fuel Cell, there's so many of them that are sitting here that are down 50, 60, 70% plus from their highs, and you're scratching your head about all the money that you've lost recently. Were you game planned properly? Did you really think that these stocks were going to just continue to go up 100% a week until forever? If you weren't game planned for those pullbacks, if you didn't recognize that the money was rotating out of speculative high multiple names and into reopening trades, into fundamental plays, then you missed out on some of the core principles of trading, which is understanding relative strength and relative weakness, understanding money rotation. And I apologize, if I'm sounding like I don't have a heart here for the people who lost money on those pullbacks, but it is what it is. Learn, Everyone takes losses trading. I have taken more than my share of losses over the course of my career. As a matter of fact, you speak to anybody who says that all they've ever known in a decade-plus career of trading is sunshine and rainbows and they've never lost money, that person is lying to you, and you should run the other way. I've made the mistakes. I've learned these lessons. And that's why, again, it's important to be part of a team, because we are constantly communicating this information to each other. We were on top of the money rotation to value in November of last year. November of last year, there was a lot of froth. This was when everyone was talking about the plugs and the fuel cells and the CCIVs and the Jumais that were moving hundreds of percents at a time. But under the surface, the real money rotation was starting to go into XLE and IWM. We were able to recognize that early because we utilize our team to be able to share information. We've got a strong team, a lot of these people with excellent backgrounds, different types of backgrounds. Some guys are more technical, some guys are more fundamental. And we recognize that money rotation early. So guess what? If you're in XLE today, which is positive again, and by the way, my team and I, we started talking about buying XLE after the close here on 427, recognizing that it was starting to break out of this holding pattern and regain that strength. If you're in XLE today, you're pretty happy. It's positive. You're like, what market sell-off? But if you are in the Qs which are now only down 2.5%. We were down 5% before. If you're sitting here in the queues and you didn't recognize this relative weakness, the VIX issue, the Apple issue, the Amazon issue, the Microsoft issue, and the breakaway gap to the downside, and you're sitting here absorbing this entire 3% down day, you didn't recognize a lot of these key things, and you got to get yourself part of a team. So that's really the thought process there. That's what's going on in the market. Relative strength is the key to this market. Money rotation is the key to this market. And this, by the way, is why I don't think we're entering a bear market right now. Because if I was in a bear market, I wouldn't be looking at a positive XLE. I wouldn't be looking at this XLF holding up like an absolute champ. Real bear markets, they sell everything, right? There's a worry about inflation. There's a worry about increasing interest rates. We're paying attention to all that stuff. We're paying attention to money rotation, and we're trying to be involved in the right sectors at the right times. So that's where we're at with this market. So I hope everyone is continuing to learn by being part of the weekly webinar, but I also hope everyone is recognizing the value of becoming part of a professional team. So let's talk about that a little bit. T3, we have professional proprietary trading accounts, and we have retail trading accounts. I'm mainly going to be talking about professional prop accounts, but I can bring up the retail a little bit as well. Basically, T3's advantage in the retail area, because there's a lot of regulations in retail, like Reg T, which limits margin. T3's advantage in retail is direct market access on professional software. We do not sell your orders out to HFT firms. So our retail accounts are great for people who are active traders. If you're just an investor or you're a low volume retail account trader, then honestly our retail accounts are probably not right for you. You're better off in a, air quotes, free account where they just sell your orders to HFT firms so that they can make money as opposed to charging you a direct commission. But who cares if you lose a penny or two on each trade that you put on if you're planning on holding the position for a couple of years. But if you're an active trader like I am, then you want to be working with a professional account, whether it's a professional prop trading account or a retail account with direct market access. So on our prop business, T3 is one of the largest proprietary trading firms in the United States. We have hundreds of licensed professional accounts. We have various physical offices. Our New York City, Manhattan headquarter office, being the one that I've worked out of until coronavirus hit. And this year I've been spending the whole year just traveling around the country. But I'm going to be going back to New York in June. I'm going to be back soon. So we have remote traders throughout the country. This year I've traded in New York City, Long Island, upstate New York, Wyoming, California, Idaho, all over the place. It's been great using our virtual trading floor system. T3 Trading Group is an SEC registered broker dealer and member of FINRA SIPC. That means all of our traders have to become professionally licensed. You have to pass an SIE, Security Industry Essentials, and Series 57 examination. You also have to pass a background check to become a professionally licensed trader. Once those exams are passed, you can get started trading. On the equity side of our business, we actually have 4 software options now. We added a 4th one recently. I got to get this PowerPoint updated. We have Lightspeed, we have Sterling Trader Pro, Wolverine aka WEX, and we also have, now we have Realtic, which is also known as EZE. In addition to trading equities, which has always been my focus, we have equity options, we have futures, and we have options on futures. The reason why I'm an equity trader and not an options trader is because I trade in a professional account. Our professional traders get access to so much capital that it really limits the benefits of being an options trader. Most people I speak with who trade options, they do it in a retail account for the natural leverage that is inherent in the product itself, and that makes plenty of sense to me. But as a professional trader, for the most part, I get access to all the capital I could really ever want from my trading endeavors. So why do I want to trade options, which are a less liquid product and subject to time decay, just for capital access when I already have as much capital access as I want? With that said, we do have options traders in my group, on my team. They're primarily focused on complex option strategies or using options for, selling covered calls, hedging, cash flow purposes. New traders, like I was saying earlier, it's the training and development that's really key. It's a 1-month training program when you first get started. Daily morning meeting, daily afternoon meeting, virtual trading floor access. Every afternoon meeting ends in a team Q&A. That's your opportunity to ask questions to myself and the team about anything trading related. So we're really here to support our traders as much as possible as they're getting started with a career. You will be required to fund your account with a capital contribution. And what we typically do on our end is we start by providing buying power at 20x for intraday trading and 8x for overnight positions. So someone who puts $50,000 into a professional T3 account, it's very likely that we'll start by giving you access to $1 million for day trading and $400,000 for overnight positions. And if you're an experienced trader, well, we're a great spot for you to be in because of our capital base. You can utilize our balance sheet. You can leverage our balance sheet for your trading. If you want to, come in with $2 million because you want access to $40 million for day trading, it should not be a problem. Reach out to me. Again, here's my email address. Happy to talk about it. And again, you get all this stuff for free. Why do I do all this training and development? Created these training program classes, do daily morning meetings, afternoon meetings. Why do I do all of this? Why do we give all of this stuff for free? Access to my virtual trading floor, access to Scott Redler. It's because we want you to be as successful as possible. It's as simple as that. If your trading account is successful, if you are making money, you're happy. If you're making money, we're making money. It's a win-win situation. That's what we want. We want the traders who are part of the T3 community to be as successful as possible. So email me. There's so much to learn. I've been doing this for over a decade. I've learned from so many people at T3, from other resources, and most importantly, I've learned from my own experiences. So I'm happy to pass that knowledge on to the people that I'm working with. Here's my email address. Reach out to me. Let's get started. Thanks. I'm going to jump back to my positions in my team. It has been a crazy trading session, so I'm glad everyone was able to join me for today's webinar during such a crazy trading session because there's lessons to be drawn from it. Last few trading sessions have been really boring, so I'm glad things woke up so that we could talk about everything and we could really learn from it. So that's it. Have a great rest of your day, everyone, and remember, like I remind my team every day, risk management